Healthcare Reform webinar on ACA reporting and SPD requirements. Thanks for taking some time today to join us. My name is Jim Patrician. I'm President of Coordinated Benefits. If you're in attendance today, you probably already realize that the ACA and Healthcare Reform has imposed some additional reporting requirements for you on your employees for right now and in the future. We have about 4 main objectives we want to accomplish for you today. First, we want to help you understand who's required to provide this reporting. It's going to vary based on the number of employees you have and whether or not you are fully insured or self-funded. Second, we want to make sure that everyone understands when this reporting is to be completed and what time periods we're reporting for. Third is simply, what is the reporting? What's it look like? What is the report? And what is it for? And finally, I think we'll spend most of our time here, and that is how's the reporting completed and what process is involved. So by the end of the session today, we hope to have shed some light for you on how you're going to accomplish this for your group. We imagine your first step may be to approach some of your vendors or advisors, and we here at CBC realize that we may be getting involved in helping you with some of the components that are needed for the reporting. And we've also developed some relationships with vendors that can assist with the reporting as well. You may also have an HRIS system and a module that will help with this reporting, or maybe through a payroll service. And based on your size, you might even decide to do it on your own after you've seen the presentation. All of these services require some form of cost, and maybe it may be your staff putting some time into it, or maybe paying an outside vendor. So keep that in mind. Our presenter today is Ken Spencer. Ken's president of HR Services. They're a human resources management solution provider. HR Services is one of our compliance partners, and some of you may already be working with them for support with general HR issues or plan documents. HR Services is also a UBA preferred vendor. Those of you that know UBA realize that this is an organization of about 140 entrepreneurially minded benefit advisors. And when our clients need help, we go to firms like HR Service and develop alliances with them to better serve our clients. So just a couple housekeeping items before we get started. You probably realize that your phones or computer lines are muted. You can ask questions by typing them in the comments box. That's usually on the right portion of your screen. We're going to try to get to those questions either during the presentation or at the end of the presentation. We're also recording the webinar, so if you realize that someone else on your team might need to view this information, or you know someone else that might benefit from it, please reach out to us and we'll email a link of the recording to you. Obviously, we appreciate any referrals that you may provide. So without any further delay, let me introduce to you Ken Spencer, who will take us through the presentation today.
Thank you, Jim, and good morning, everyone. Thank you so much for joining us today. As Jim mentioned, we're going to go through a pretty good overview of the overall Affordable Care Act reporting requirements. We'll talk about who's required, the process for filling out the form. We'll actually bring up the form and go through and discuss how you complete that document. We'll wrap up our discussion talking about summary plan description, some of the requirements for ERISA, and one of which is a summary plan description document. We'll explain more on that, as well as some of the employee notices and such. Our goal today is we hope that you walk away feeling a little more comfortable about the compliance items and the solutions that Jim and Coordinated Benefits companies bringing for you. So we've got the Department of Parks and Recreation, Department of Motor Vehicles, and now we have the Department of stressing about the Affordable Care Act reporting requirements. This is seems like every time we turn around, we've got some new change and some new thing that we've got to deal with. You know, in partnering with Coordinated Benefits, they help keep you informed of these kinds of things and these issues, and that's what we're doing here today. So let's talk first about who's required to report. So if you're an organization with 50 or more employees, and that's either full-time employees or full-time equivalent employees, and we'll go through a calculation on what that means later, and you have a fully insured plan, then you're required to report. If you're a smaller group with a self-funded plan, so if you have less than 50 and you have a self-funded plan, you're also required to report. And interesting enough, this law, they've actually included the government and nonprofit organizations. Quite often they'll pass laws and exclude the government. All right, so first, why do we even have to go through this process of reporting? The IRS and those who govern the Affordable Care Act are having us do this because this is how they're verifying who is making sure that individuals are following the mandate to have coverage, as well as to make sure that those who are considered an applicable large employer, so those who are required to offer medical insurance, that they are offering insurance, or they know who to levy fines to. Of course, there's also individuals may seek premium tax credits, and so this provides them with that information as well for that. All right, so let's go through a calculation to determine if I'm an applicable large employer, because a lot of you may be borderline on that, or you may be part of another controlled group and may not realize that you're a large employer, applicable large employer. So let's go through that calculation. So what we do first is we look back over the past year, averaging, looking at the employee count. Now, this is the past calendar year. This is not your medical insurance plan year, so we look at the calendar year. So if I'm looking at, do I have to report on 2015, I look at the calendar year for 2014. So I determine the employees in that previous year. I look at any employee who's averaged 30 hours or more, or 130 hours per month, and that would be considered a full-time employee. So I would count all of those up. And then I'll look at my full-time equivalent employees. So for that, I look at the hours of service for those who are non-full-time, the variable hour employees. And I look at those month by month, take those total hours and divide by 120, and that'll give me a full-time equivalent count. So if I add the two together, then that'll help me determine whether I hit 50 or not. Now keep in mind, hours of service include time off, paid time off, vacation, and holidays as well. So we have to make sure we're including that in those calculations. And then seasonal workers, we have to factor in their hours of work. So any hours of work for employees on your behalf, whether it's seasonal, part-time, those all would fall into the full-time equivalent calculations. Let's go through an example of this together. So if I'm looking at this chart here, this organization, first they went through and they calculated those who averaged 30 hours or more, and that's this top line here. In this example, they've got 48, 45, and so on all across, and that's their full-time employees. So next, they looked at their variable hour employees, and they looked at those, and they calculated all the work hours. And I'm using a very simple example here, but in this case here, they've just had 3 employees. They looked at the hours that they worked each month, and then they took the total of those hours and divided by 120. And then that gave them the full-time equivalent for that month. So now I can go down here, and I can see the total size month by just adding this line and this line. Now, if I add up the total full-time equivalent employees and the full-time employees together, this line here, and I take the average of that for the year, that would, well, actually, if I just add up the total, that's 605, 45. If I divide that by 12, now I get the average, and in this case here, they're an applicable large employer. So anyway, that just gives you an example of how to do that calculation if you're close, and that's not an issue for you. Many of you are well over that, and it's not an issue for you. In a moment, we're going to talk about a little bit on controlled groups as well, because if you're part of a controlled group, that could make it to where you're an applicable large employer and would need to do the reporting as well. So sometimes we have that kind of a situation going on, and I'll explain more on what a controlled group is in a moment. Before I get into more on the actual form, I just want to make sure we're all comfortable with a couple of terms here. And we have what's called the measurement periods, stability periods, and administrative periods. This doesn't have to deal with the reporting here. I'm just diverting for just a moment, because I think it's important that we all have an understanding of who's eligible for coverage and some of these this terminology. So one of the things we have to do as an employer is make sure that anyone who's averaging 30 hours or more, that that they're eligible for coverage. So we've got to make sure that when you're looking back, there's a number of ways to set your measurement period. So your measurement period can be anywhere from 3 months to 12 months time period. There's also a monthly option, but most don't do the monthly option because then you're taking employees on and off every month of coverage. So if I use the anywhere from 3 months to 12-month option, and I'm going to use 12 months as an example. So if I have a 12-month measurement period, what I'm doing is I'm looking back over the past 12 months, and I'm looking at anyone who's averaged 30 hours or more, and those individuals now are eligible for coverage. And so that's an example of a measurement period. If I had a 3-month, then I would look over just for 3 months, and then they're eligible for coverage. Now there's what's called a stability period, and the stability period that's the time period that they're able to be on coverage regardless of their work hours. And it has to be a minimum of 6 months, and then it would be equivalent to whatever my measurement period was. So if I had a 12-month period like the example I gave, the stability period would also be 12 months. And if I had, now there's also what's referred to as an administrative period. The administrative period is the time frame that you're allowed to do your calculations, give people forms, get them enrolled, get them on the process. The administrative period can't be more than the combination of the measurement period and the administrative period can't be more than 13 months. So in the example I just gave you, the administrative period would be 30 days. So it couldn't be more than 30 days. So anyway, just wanted to make sure you were clear on that terminology, because that's important that we have that down on how we're managing and working with that with employees. With that, let's dive back into the Affordable Care Act reporting. So in essence, what this reporting is we're filling out required information. We're filing information with the IRS, and we're sending copies to employees. I mean, in a very simple format. You'll see as we go through this process is very similar to what you do with W-2 reporting at the year end. Now, it's important that we take steps now, and probably should have been doing this for a number of months now, because now you're at the end here. You've got just about 3 months here to pull everything together. And there's a lot of information, as you'll see when we dive into this. So it is important to take steps now. Don't wait any longer. If you have been putting this off, you don't want to do this any longer. So I'm going to show you the things that we need to track. So we have 2 new sections that this deals with. It's Section 6055 of the IRS Code and Section 6056. And it has to deal with the minimum essential coverage and the employer responsibilities. In essence, they're looking at from an employer that we're meeting minimum essential coverage at affordable rates, and that we're making sure we're getting all the participation handled correctly. All right, so here's the kind of data that we're going to be tracking. Some of it's pretty basic, and you have this information easily in your systems, HRIS or payroll systems. But employer name, address, EIN, calendar year, contact person name and phone number, basic stuff here. You need to be able to show that you've offered full-time and dependents the opportunity to enroll in minimum essential coverage. And by the way, dependents does not include spouse, so you're legally not required to offer coverage to spouse. Most do. And then also, if we do that, then we're able to demonstrate that we made a qualifying offer to everyone, and it makes filling out the form a little more simplified, which I'll show you in a moment. Okay, the month's coverage was offered, the premium share, and this only becomes an issue if you're making a qualified offer where you're showing the minimum value and minimum essential coverage, and that you're not charging more than 9.5% of the federal poverty level or of the employee only cost. Then it's the only time this becomes an issue where you have to show that exact figure. You're going to track the number of full-time employees during each month, name, address, taxpayer ID. And then you'll see there's several sections where we have to look through codes and indicators, and I'll go through those with you as well. And by the way, we'll also provide you copies of any of these slides that you like, and as Jim had mentioned, we'll be recording this as well, so you don't need to worry about writing any of this down. Okay, the forms themselves. There's a number of forms that come into play. For those who are getting coverage over the marketplace, they're going to use 1094A. Insurers and employers for sponsors for self-insured plans are going to use 1095B. Most of you are going to work with 1095C and 1094C. So the 1095C is for those who are applicable large employers and those who have self-funded plans. And then there's what's called a transmittal form or a cover sheet. So the 1095-C, we provide a copy of to each of the employees. Anyone who's had coverage at any time during the year, they're going to get a 1095-C, and all of your employees who have been covered even one day. And this is where it gets a little bit complicated, because you may have individuals who worked for you and were covered for a month and then they quit. You're still going to have to track and provide them with that, just like we do W-2 forms. You know, we have to, anyone who's worked for us and then they leave the company, we have to still send them a W-2 form. So very similar approach and process. And we're going to go through the details of each of these forms here. Let's dive into first the 1095-C. So the 1095-C, as I mentioned, this is the form that's given to each employee. So if we look at this, the actual form, if I look at section 1 through 6, that's all dealing with employee information. So that's the kind of data that I'm going to need to have to fill this form out. 7 through 13 all deals with the applicable large employer. This is your employer data, information about your organization. The more complicated part of this form here is part 2, and that's number 14, 15, and 16. And I'm going to go into more details on each of those in subsequent slides. Before I do that, I wanted to point out that as an employer filling out this form, if you have a fully insured plan, all you have to do is fill out Part 1 and Part 2. You don't have to worry about Part 3. If you have a self-funded plan or partially self-funded plan, then you have to fill out Part 3. And you can see Part 3, now it gets into some details of names of covered individuals, Social Security number, date of birth, even of all participants in the plan. So now I'm having to get information on dependents and spouse and others, and and that kind of information. So it is a little bit more challenging to get and obtain that kind of information unless it's available on your insurance applications. Let's go into 14, 15, and 16 now. All right, so 14, again, this is the area where you're going to look at tables to then identify codes that you'll insert in. So these are codes that describe the coverage offered to participants. Now, if you look at the first one here, 1A, this is what's considered a qualifying offer. So this means that I'm offering minimum essential coverage, providing minimum value offered to full-time employees with employee contribution for self only equal to or less than 9.5%. And this coverage is offered to spouse and dependents. Okay, so if I'm doing a qualifying offer, and in my mind, I believe that most of you probably are targeting this. And so if you're targeting this, it makes filling out the form quite a bit easier. So if I go back here now, if I've made that qualifying offer to everyone, then I'm going to just put 1A in the first box here where it says all 12 months. So if I had that qualifying offer and for that individual. Now there may be some individuals that that may not be the same thing for, but in most cases, I believe that 1A would be what you'd fill out. Now you see your other codes here. I'm not going to read every single one of these, but just you can see the example here, minimum essential coverage providing minimum value to employee only. So if you're an employer and you only offer it to employees only, then you would put in 1B. Now keep in mind, if you're 50 or more, the requirement was that you offer it to employee and dependents. So you'll be falling short of meeting the full requirements if that's the only offer that you're making. So just keep that in mind. You can look at these other codes, and then you would code them in the sections. If it's different for month by month, then you would put that code inside each of those months, whatever the code is. If it's the same, and that's why you have to look at this employee by employee to make sure that did I offer all of them the spouse, dependents, and employee minimum essential coverage at the minimum value and the 9.5%, not charging more than 9.5%. Okay, so let's go on to 15 now. Now 15 is interesting because I only have to complete line 15 if I had any other code, if I had entered code 1B, 1C, 1D, 1E in 14. So if I made a qualifying offer, so coming back here again to 1B, 1C, 1D, you can see here that means I didn't offer the full coverage to everyone. So if I had a qualifying offer, I can skip doing 15. But if I didn't meet that requirement of that qualifying offer, then I have to put in, it says complete box 15 only if these apply. And then I enter the amount of the employee's share of the lowest cost of monthly premium for self-only minimum essential coverage. So now I'd have to do a calculation, and so you'll have the calculation, and then you would insert that information right inside of here. For if it's the same amount for all 12 months, you put it in there, or you would put in each amount if it's different month by month. As I've mentioned, if I put in 1A, I can skip this section. Okay, let's go to 16. Okay, so 16 says applicable section 4980H State Harbor. So there's different codes here. Let's go down to 16. Okay, so for each month, enter the applicable code. And so, so some codes may have different, you may have a different code for each month. This is a little bit complicated and a little bit of the hassle part of this form. So here, like 2A, employees not employed during the month. So we may have some months where they weren't employed, and then other months where they were. Remember, we're reporting for the whole calendar year, and so if they weren't employed but they were reported part of it, then we may have 2A for part of the form and 2B for another part. So 2B is employees not full-time. So there may have been part of the year that they were not a full-time employee. 2C, employee enrolled in coverage offered. And again, that so once they're covered, then they would be under 2C. And I won't read every single section here for sake of your time today, but I just wanted to introduce you to, you'll see these tables, and there's very clear instructions in how to fill out the form. In fact, that's one of my recommendations, is that each of you go get that form and check the sections, especially 14, 15, and 16. Those are the most complicated sections that you'll be filling out. Okay. Okay, now I'm going to go over to Form 1094C. Okay, now this is the transmittal form that you'll fill out and submit in with copies of each of your 1095C documents. So you'll be sending those into the IRS. So you'll take and give a copy of the document, the 1095C, to the employees, anyone who's had coverage during the year for even one day, and then you'll make a copy of that and submit it in with 1094C. So now if we look at this document here, most of this, Part 1 through 16, pretty basic employer information, that you'll submit in there. If you come down here to, let's go to 18, total number of 1095Cs that are submitted. So that's pretty simple. You just count up the total number of forms that you're including with it. And there may be, keep in mind, that may be some individuals who had terminated as well. So it may be more than what your total current employee count is, because it would include turnover and anyone who had received coverage during the year with you. Okay, if I go down to 19, is this the authoritative transmittal for the ALE? If you're not part of a controlled group, then it would be. If you're part of a controlled group, then you want to see those instructions to decide who checks that box or not. Total number of forms submitted. Let's see, I'm going to go down to, let's go down to 22. Certifications of eligibility. Check all that apply. So you may have multiple ones that apply here. So if I'm, that first one, if I'm a qualifying offer method, check this box if one or more full-time employees were offered coverage that is minimum essential coverage, minimum value, and meets the 9.5%. So I mentioned before, that's probably what most of you will be targeting in most cases. So that box is likely going to be checked. Then they've got the qualifying offer method, transition relief. There may be some individuals who are not covered because they're still under a measurement period. So here is, check this box if they met, if the offer was made to at least 95% of all employees, and for the purposes, some who were under the measurement period, time period, were not included. And then you've got some other methods here. You've got your 98% if it's offered to 98%. Again, this is a section where if I'm filling out these forms, I would make sure I would go in and read each of these definitions and each of these sections so that you clearly understand how to fill this out. And I'm going to stop for just a moment. And Tracy has asked a question: are these forms submitted electronically? And I will show you. You can either mail in the form, or you can submit them in electronically. If you have 250 or more 1095-Cs that you're submitting it in for, then you would need to submit in. You would need to do it electronically. Okay, and I have another question: is 1095-C required if eligible employee declined coverage? Okay, the 1095-C is not required if they did not have coverage during the year. So if at any point you were providing them coverage, then you would complete the 1095-C. Just by virtue of them being eligible and they declined does not warrant you having to fill out that document. Okay, so let's go on. So there's other parts to the 1095-C. You'll see here where you submit in the, if you had, yes, if you offered minimum essential coverage to 95% or more, you can check this box, minimum essential coverage. And then you fill in these other fields here: full-time employee count, total employee count, were you part of a controlled group or not? And you can see here this, most of this, rest of this is pretty straightforward. Think of this again like a W-2 form. You know, here the employer reports to the IRS with you're going to give a copy to the employee and a copy to the IRS. The reports are due by January 31st to employees, and you can mail it to them even within the same. When you're mailing out your W-2s, you could include this right in with the W-2s. To me, that makes a lot of sense. Okay, what if I'm part of a controlled group? So controlled groups, you know, you may have 2 or more organizations, you know, with common ownership that might make it to where you're considered an applicable large employer, even if you're a smaller group. There's a couple of different tests here. You've got the parent subsidiary test, where the parent business organization owns 80% or more of the subsidiary. So if you have that type of situation, then those who are in the subsidiary, they may be a group of 20, and the combination of the parent and the subsidiary, making them 50 or more, would make them, they're not only part of a controlled group, but they're now all of a sudden an applicable large employer, and they have to report. Same thing with the brother-sister test. Here you have 5 or more, 5 or fewer persons who own 80% or more of the business, and that's another example where then you would be viewed as a controlled group, and you would have to take into consideration and may have to report there as well. Okay, I had another question that says, can the forms be provided to employees electronically? My understanding is that it would not be provided electronically, that you would actually provide them a hard copy. I would have to double check on that one. I believe there could be a chance that there may be some way that you could get them that information electronically, but I'll have to double check on that one. Right now, my understanding is that, you know, it's very similar to a W-2, in that you provide them a hard copy of a W-2. You would do the same with this as well. So, all right. So when are reports due? And I mentioned before. Now I said January 31st. Technically, you have through, you know, it has to be done by February 1st. So I think of it as a 31st, because that's what we all have in our minds when we send out our W-2s. So that's when it has to be out to all employees who, at any point, who had been on the plan. And then also, we want to make sure that we're submitting in our 1095-C and copies to the IRS by February 29th if I'm submitting in copies, hard copies. If I'm actually going to do the form electronically, then I have through the 31st of March. Now, I mentioned before, if you have 250 or more employees, that you do have to file electronically. You don't have a choice. And by the way, if you're having challenges getting all of this done and everything, you can file for a 30-day extension with using Form 8809. One of the things to keep in mind through all of this, the IRS has mentioned that they're not going to assign penalties if people have put forth a good faith effort to get this done right and submit and everything. So this first year, they are being more lenient. Okay. So I have another question. It says, to confirm, if a controlled group of 2 companies, with one company having 25 and another having 52, they must report all as 77 employees. Okay. Yeah. So if someone has first, the combination of the 2 would make both of them applicable large employers, and then they would have to submit in the reporting requirements. In terms of whether that they would report the total together, I believe they're only going to be reporting on those that are under their direction for their 1095Cs, but they would indicate that they're part of a controlled group, and then there's a place in there where they would provide additional information on that. Okay, so where to file, and I apologize, I did not look up ahead of time for your specific. There's a couple of different filing locations for your state, and I did not look up it. So I don't hold me to this top line here. If you file electronically, it goes directly to them. But I apologize. There's actually 2 different main locations, and it depends on your state. So you're going to want to look up your state to make sure that you have the correct one there. Now, there are penalties if we don't do this, $250 per return up to $3 million. So you need to make sure that we're keeping on top of this. It can get very costly if we're not doing this. So I would recommend that either take the steps to get these forms complete. A couple of recommended steps to help you in summary here, and then we'll wrap up and we're going to go into another discussion now. Know which information to track. Look at the form itself. I've given a summary of some of the kinds of information, but if you look at 1095 and 1094 and ask yourself, where do I have that information electronically? How am I going to be able to report that? That will help you. Develop a process and documentation that shows the full-time eligible employees. Make sure you have a process in place as well where you're collecting back from individuals not only the applications, but also waiver forms and such, too. It's important to do that. Develop a process to collect information about the offers of coverage. Review your ownership statuses of the controlled groups. And I would discuss with your payroll providers, third-party vendors and such. Jim had mentioned this already. Look at your current available resources. Is this something you're going to be able to do on your own? Will your payroll company help? Do you have other third parties that are assisting? And then Jim has a number of great, there's a number of ACA healthcare reform reporting organizations out there. There's some that have the full HRIS system and the reporting. There's some who just will generate the reports and give it to you to distribute, and there's also some who will generate it and send them out for you. So there's a number of different options out there, and Jim's got some great contacts for that kind of thing. Okay. And just ensure that your systems are in place to collect the data and that you're ready to go with this report. And you can't keep waiting on this because you can see there's a lot of information you need to pull together now. Okay, with that, I'm going to shift gears now and talk about some other requirements. There's a number of audits that are taking place now. It used to be that so ERISA, Employee Income Security Act, Employee Retirement and Income Security Act, is administered by the Department of Labor, and they have a small division within there that administers that service, that law. And there's a number of requirements. They're auditing more plans now. They've hired more auditors. They used to just audit retirement plans only and larger employers, but now they're auditing all size groups. We had a 15-person company audited just a few months ago for their health and welfare benefit plans. We've had many organizations. We work with brokers across the country, and we're hearing more and more audits that are taking place. And in fact, we had one 40-person group where the broker called and said, "Why are you auditing this plan?" And they said, "We're planning on auditing all plans by 2018." and I think that's very lofty. I don't believe that they could actually do that, but nonetheless, it is out there. So before I continue this, I wanted to answer one other question that I noticed has come over dealing with our last topic. It says, do we have to offer COBRA to an ACA seasonal employee when they leave our employment? COBRA, certainly anyone who meets requirements for COBRA, so if they were on a plan and then they leave the plan, you do have to offer them their rights to continue the plan, whether it's federal COBRA. If you have 20 or more employees, then you have your up to 18 months and maybe up to 36 months, depending if they have other situations and circumstances like divorce or disability and such. And so you would need to make sure that you're following all those provisions. And it really doesn't matter if, now they said the Affordable Care Act seasonal employees, if they at any point were on a plan, so if they're a seasonal employee, at any point they're on a plan, then they have COBRA rights. And so that would still apply. Okay, coming back to our discussion on the some of this audit requirements, there's a number of things they're looking for when they do their audits. They're looking for what's called a summary plan description, or a summary plan description wrap document is one of the items. They're also looking for various employee notices. If you're doing summary material modifications, they look for if you've completed your Form 5500 documents, and they're verifying if you're meeting all the changes with the healthcare reform. So a lot of things we have to be prepared for when we're audited. One of the items that I've mentioned is kind of a critical item. It's one of the top things on their list is what's called this summary plan description. A summary plan description is a summary of, has all kinds of information about what ERISA wants to make sure participants receive. Here's some of the kinds of information that's typically left out of the information you get from insurance companies. So the information you get from the insurance providers are, in pretty much all cases, fall short of completing what's viewed as an SPD. So a common approach for organizations is to use what's called a summary plan description wrap document. What a wrap document does, it creates one overall plan document and summary plan description, wraps around all of your benefit plans, medical, dental, life, disability, any plan that's covered or that's covered by ERISA. And then it pulls in the missing insurance company information. So it asks the questions to pull in that information and then ties in the required ERISA language. Now this document has to be, the SPDs or the wrap documents has to go out to all participants in the plan at least once every 5 years. And then in between years, as you have changes, there's what's called a summary of material modification, where you have to communicate to participants what's changed. So if you've had a benefit change where that change is considered material, usually meaning the benefits went up or the benefits went down, then you'd need to provide them with something that gave them information about the, you provide them with details about what's changed in the document, what's the date, how's it impacting them, and what's going on. And that's called a summary of material modification. Okay, now there's also various notification requirements. So you've got everything from initial COBRA on down to summary of benefits and coverage. Now we find most employers are pretty good at COBRA now, and they're getting out the summary of benefits and coverage because they get that from the insurance company. But there's some misunderstandings where sometimes we think that everything's being taken care of by the insurance company, or that someone else is responsible, or gee, we didn't even know that they were required. So there are other notice requirements here. I'm going to show you a tool and an approach that if you work with our organization will help you get all of these notices taken care of. So we assist with, we have a system where you can go in, answer some simple questions in some web-based tools to where it will automatically pull in an all-in-one notice. So it pulls in everything from the initial COBRA on down to the Medicare Part D. It pulls in which one applies, populates it, and emails it to you in a ready-to-deliver format. Now, there's a separate button there where we generate your health exchange notice, and then there's also, I'll show you a drop-down option where you can complete a summary plan description wrap document, all web-based. So it makes it really nice where you can key in the information, save and store the data. We also give Coordinated Benefits company back-end access to that as well. So if they're if they're assisting with any of the documents, you've got that kind of assistance and help as well. We also have a tool in there to generate these summary material modifications. As I mentioned, that's another item that's audited and asked for when ERISA comes knocking on your door. So the tool we're talking about helps with all of these things, all of these notices, except for the summary of benefits and coverage, which you get from the insurance company. Okay, one other, a separate reminder, a lot of folks don't realize it, but your 125 premium only plan documents may be out of date. There were changes last year that if you've not updated your documents or had them amended last year, you're going to need to look into that and either have that amended or get a new document. We, of course, have an option, where you could include that as well as part of your service with us, where we can help with that too. The SPD wrap documents and your notices have to go out to participants, I mentioned, and there's several ways to deliver those documents. You can mail the document to them. You can hand deliver the document. And then also you could do something electronically where you post the document to an intranet site and then give people directions and how to go in and obtain that information. Now, if you're taking that approach, you still have to separately notify individuals, whether you're doing that by mailing them something or sending them an email and then giving them directions on how to access that. You would also want to offer to provide them a hard copy upon request. You can also email it to participants. So if you're emailing it, it has to go to their regular work email, or if you're going to send it to a personal email, you can do that. You just need to obtain written authorization, and we'll provide you with all of those documents necessary to do that. We recommend most of you look at doing this electronically. It's a lot more simplified than having to make a lot of copies and killing lots of trees. Now, there are huge penalties if you're not meeting these requirements. So if you're missing SPDs and notices and such, there can be hefty penalties up to $500,000, imposed. So it's important that you keep up on all of these compliance issues, not only Affordable Care Act, but also the ERISA requirements and having those SPDs and those notices and other things taken care of. Now, there's a service that's available. We've partnered with Coordinated Benefits, making available to you a service called Compliance Basics Plus. Let me just give you a quick summary of what this does, because it's designed to give you a total compliance solution and to make some of the stuff easier. So one of the first things we do is each month we're going to tell you what you need to know and do from an employment law standpoint. We cover all employment laws, state and federal, and we're going to give you alerts. Here's an example of one where we give you key compliance reminders and actions. We cover key federal changes that's going on, and it's more than Affordable Care Act and ERISA. It covers all employment laws. And we cover state-by-state changes as well. So you can go in and see any states where you have employees and see what's changed and what are the actions that you have, requirements you have there. We also once a month are going to give you one best practice article where we take one item and we go into more detail. So for example, we're doing one this month on how to fill out the Affordable Care Act documents. So some of what we covered here today, but in more detail, we're actually showing you how to get ready, how to fill out the document. But we take a different topic every month. We try to take something that's relevant at that point in time. We've covered everything from maybe compliance related, maybe HR related, or leadership. Here's an example of one we did on how to prepare to pass an ERISA audit. I've mentioned this employee notice service that we have, and I'm actually going to go in online and show you what that looks like. But it pulls in everything in this bracket, fills it out for you, sends it to you, after you answer a few questions. So I'll show you what that looks like. And then I also mentioned we include a summary plan description wrap service. So you can go in and edit the document, save the data, go in and make changes anytime you want to. Even though you only have to pass this out to participants every 5 years, you have to have a current, accurate document to give to new hires, or to give to the Department of Labor if they come in when they come in and audit you. So it's important to have some sort of a solution like this. Now you can go get this kind of service through an ERISA attorney. They're going to charge a lot more than what we do, and theirs you're going to have to go back to them anytime you want to make edits or updates, where ours you can do it right online. With that, let me go in and I'm going to show you what some of these tools look like here. Okay, so if I go into our service, I'm going to go in where you would actually log in. So we go into it's called Compliance Login. And so if I log in as a client, let me show you what that looks like. So if I log in as a client into the system, these are all the web-based tools and solutions you have here at your fingertips. So you have, I mentioned that we had this all-in-one notice. I could go into here under Employee Notice Report, answer these simple questions about my company and about my medical plan, and then I come down here and I click that button there to generate this all-in-one notice. It takes care of all those notices for me, and then that emails it to you in a ready-to-deliver format. I can separately generate my health exchange notice. The reason we separate the two is that notice has to go to all employees, whether they're a participant in the plan or not, where the other would only go to participants. This tool will remind you 30 days ahead of time each year for you to go in again each year and rerun your annual notices when you put in this date right here. Also in here, I can access all of our past best practice articles. Once a year, we also provide you with a compliance calendar, so you can very easily see month by month all of the steps and actions that you have to take throughout the year, and then we remind you of those things again in the legal update that goes out. There's a HIPAA toolkit here where you can go in and set up your HIPAA compliance. You can understand what level of HIPAA applies, what are the steps to take, and then go back into our section here, and we've got everything you need to set up your full HIPAA compliance program. We've added a new section called HR Solutions, where we provide you with many forms and documents, supervisor training, other compliance tools, benefit administration assistance, even job descriptions. So a whole section of tools here. This is the SPD, Summary Plan Description Wrap document area. So in here I can go in and record the information about my benefits, about my benefit plans, my eligibility, when benefits terminate. You can see there's a bit of information that you fill out in here, but then it's saved and managed for you, and then you can easily generate your summary plan description document, send it to yourself or to your broker or both of you. So it makes it very easy to manage and work with. You can manage your 125 premium only plan document or very easily generate summary material modifications, everything within inside of this tool here. So with that, let me bring it back to you if you have, see if you have any questions. This is my contact information. If I can assist you with anything, feel free to call me or one of my, I'll either help you directly or have one of my associates get back with you. But Jim, I'm going to turn everything back over to you. Thank you, everyone. I really appreciate your time today.
Well, and thank you, Ken. So that was very enlightening, and I think that some of us are already using our end-of-year paper bags because we're anxious about what might be happening with reporting. But I think in some cases it may be straightforward for some of our clients, and in other cases it's obviously going to be worthwhile to get some experts involved. A couple things in closing here. First of all, I wanted to thank everybody for taking some time out today. We do have a list of those that participated, so I think, Ken, we have about 3 questions, one having to do with filing electronically versus hard copy, maybe also filing separately for control groups, and then the filing location for the state of Illinois. So we'll try to get answers to those questions and get them out to our participants. Secondly, those of you that already work with coordinated benefits probably recognize that during our annual plan review, we spend some time talking about areas where you should take action, and we mentioned these notices and requirements that have to happen every year. And Ken and his firm, HR Service, is one of the solutions that we use. So if seeing how simple that system works and feeling like you might be able to get yourself in compliance a little easier than maybe you had thought in the past, please reach out to us. Reach out to your account manager. Reach out to us directly because obviously we want to try to keep you out of trouble. I think with that, I just wanted to thank everyone again for participating. Our number is 847-605-8560. If you have questions, obviously your account manager can be a great resource for you, and anybody that's new to coordinated benefits, feel free to contact me, Jim Patrician, at extension 13. Don't forget the importance of having that summary plan description. I think a lot of folks think that insurance company document is enough. It really isn't. It does not meet that requirement that the Department of Labor auditor or the ERISA has in place. So with that, that concludes our webinar. Thank you again for your time, and have a great rest of your day.